blocks to go. Mine did
That's
not
okay.
upgrade.
We're here now.
See, my mobile phone, Mark, is still on 6 blocks to go.
Oh, did you put this on the YouTube already? No.
No, my PC's doing it, but my mobile's on 6.
No, this is
It's time for the main event of the evening. In the purple corner.
Oh, we're now live. Okay. Thanks for the countdown. So, good evening, everyone. Good evening.
Good evening, Charlie.
Good evening, Charlie.
Good evening, Adam Cleary. Yeah. So, it's a very exciting evening. It's the Blockchain Olympics. This comes around once every 4 years. Actually, ironically, the Olympics were cancelled this year, so thank God for Bitcoin halving. Adam, how do you feel about the Blockchain
very exciting,
Olympics?
yeah. It is the sort of main event of Bitcoin and something people have been talking about for years, and now it's here. So let's see what happens to the price and the network and everything.
But what does it mean to you? Have you bought more Bitcoins today?
Not today, but recently.
Will you buy more tomorrow?
I know that I know you're skeptical about it, but I love the S2F model. I think it's a fantastic framework to think about Bitcoin, because it effectively Bitcoin is this hard-baked deflationary currency by design, and that is what makes it so different. And the S2F model really brings that forward. Whether it's going to soar to the prices that he suggests is another matter, but I think mentally the framework is very useful, because it points out that the way in which supply is deflationary doesn't have a sort of linear effect, but rather can have a more logarithmic effect.
Exponential.
Yeah, exponential.
Yes.
Sorry.
So, James, what do you think of the S2F model whilst we're here?
Well, we've obviously talked about this quite a lot in the past, but first time on YouTube live streaming, only minutes before the halving, so it's definitely a good time to dive into it. I think it's an interesting model. I think that there is a correlation there, and that there is a correlation between the depleting stock or new stock and the price, but I don't think its price is increasing just because of that sort of reduction in new supply. So I think the problem that I have with the stock to flow model is this idea that because the supply is reducing over time, then the asset is more valuable. I think that
it's not reducing; it's supply growth is reducing. The
supply growth is reducing, and you have lost coins. So you could say it's disinflationary, or it's even deflationary if you account for the sort of lost wallets because of the complicated nature of Bitcoin wallets. But I think what it does do is reduce the amount of new Bitcoin being sold into the market. So essentially, you have you have less selling pressure in absolute Bitcoin terms. So you go from 1,800 coins in a day to 900 coins in a day, and I think that that means the market has more room to go upwards with the same amount of demand as it did before. So that's why I think the sort of stock to flow, the halving creates sort of price growth rather than the kind of S2F Plan B model that we're such a fan of. Charlie, please, I'd love to hear your view on it.
Charlie hates it. I was just trolling him.
No,
Adam is just doing what he does best. But the point here is that I've been close to the gold market for over 2 decades now. And no one talks about the miners as being influential in price. I mean, gold mining shares are an interesting thing because, leverage on the gold price and all that stuff. And if you've got oil down and gold up, it's Christmas. Hello, Laurent. We'll come to you shortly.
Hello, Laurent.
Hi, guys.
We'll come to you shortly, as I said. But the point is that no one really in the gold market sort of sits there saying, let's go and shoot the gold miners and stop new supply coming to the market, because if we shut all the mines down, then the price will go to the roof. No one talks about that. In fact, no one talks about supply at all. They just assume that it's long-term low, and people believe in gold because one risk about gold is the idea of there being far more of it in a few years' time than there currently is extraordinarily low. So people just park that thought, and then they carry on loving gold for whatever reason they do. And I think the same argument's true in Bitcoin, and that is that the fact that it's limited supply, finite supply, falling supply growth, call it what you want, is just a badge of honor. It brings it into the room, it makes it a credible asset. But actually, that doesn't create the value. The value is created by other things. And I think that in a nutshell, the stock to flow model is the biggest pile of bollocks I've ever seen in my life.
In conclusion, fantastic. So, thanks, Charlie. We've got Lauren just joined us. Thank you, Lauren. Lauren is MD at 21 Shares and has launched how many products now?
We have 11 products on the Swiss exchange. We have an extra 7 products on the BX, which is the secondary exchange in Switzerland. And then obviously its parent company in Stuttgart, we have another 7 products there. So it's all very exciting.
Phenomenal stuff. Just in time for the halving. Charlie was just telling us about the stock to flow model as being, not a main driver of Bitcoin's price. Lauren, what are your thoughts on that?
I totally agree with Charlie. It's not. Most people are not driven by these kind of metrics. In fact, the metrics available in the Bitcoin ecosystem is just not quite there yet. We've not explored them, and we're still far away from any heads of research teams in big investment banks trying to decipher really what this is all about. They still don't know. We don't know. No one knows. This is all going to happen because it was created some 11 years ago by some unknown person. If you put this on the street, people...
It was invented by Plan B.
Yes. Yes.
Satoshi is Plan B.
But what is Plan B?
It's a woman.
Well, allegedly it's a woman. I tuned into Consensus Distributed earlier, and it came up as Plan B, and it was a woman, which I mean is fantastic if it's true. We need some more female representation in this industry.
I agree with that. I agree with it.
But we thought it was a Dutch man, and so it was a bit of a surprise.
Well, Paul Tudor Jones certainly understands the things that make Bitcoin work and have value. And, he set them out today in CNBC, and he set them out in a very good article that's going round. And so even if, as Charlie says, you don't believe in the S2F model, I think Paul Tudor Jones makes a very good argument for Bitcoin. And, it's obviously finally dawned on him. So he's early, and presumably everyone else will follow and finally begin to understand, the enormous value of Bitcoin in the current system that we live in.
He said he put between 1% and 2% of his portfolio in Bitcoin. I mean, that sounds brave. I mean, for a portfolio of that size. Do you think that's fact or fiction?
I'm sure it's fact.
I think it's the minimum.
2%.
It's the minimum you can have in Bitcoin.
Yeah, it's small. Yeah. And the point is that he's making he made the gold 1976 argument. I thought he was going to make the gold 1970 argument, which is kind of where I am. And that's that this is, the grown-up asset of this decade, and people will look back and say, I should have owned that thing. And why not? But he wasn't pro stock to flow. He was pro tight supply. He was pro the fact that Bitcoins weren't being printed. I make the argument that if gold mining, if gold supply went up 50% a year, no one would talk about gold. It wouldn't be a thing. And the same is true with Bitcoin. The fact that they're low is why we're talking about it. But that is not the value creating bit. That is the reason why we're here.
But you've just outlined the argument for stock to flow.
No, I haven't.
Yes, you have.
No, I haven't.
Yes, you have. You've just said if supply went up 50% a year.
Brilliant.
I think I found
then
Plan
it wouldn't
B.
be worth anything. Stock to flow. Stock to flow.
Oi.
We'll do our first screen share of the day. Here we go.
Yeah. They're clearly
Plan
trolling you,
There
Yeah,
she
she's
is.
hot.
You recognise this lady, Charlie?
Yeah.
I thought as much.
So look, you don't go and buy the Swiss franc, which has got credibility as a fiat currency, and the Japanese yen, which has also got credibility as a fiat currency, compared to the others, Adam. Just before you get that one in, but no one sees them as speculative beasts that are really exciting and treat them like tech stocks. They're just seen as more stable than the others, which are more unstable, which fall quicker. These guys fall slower. So I think that you see this everywhere. And the idea that you halve the mining supply, and then one day we're going to go from 2 bitcoins to 1 bitcoin a day or something, and that's going to cause the price up. It's just absurd. People know this. It's laid out in advance. I love halving. I love the idea of it. I love the design of Bitcoin. Don't get me wrong, but I just think the halving event will not cause the price to double. And I give one final thing. It's like the Bitcoin price has doubled 18 times since 2010, or whenever it was first at price. And most people have never seen an asset double 18 times, and people think that's not. Anyone who doesn't think that's a big deal doesn't know what doubling 18 times actually means. You've got to think about that rice on the chessboard. It's absolutely enormous, and if that's true, if stock to flow is true and it doubles, then 2 of the 18 doubles are courtesy of halving. The other 16 out of 18 are courtesy of something else. Guess what that is? It's Bitcoin's great. It's demand. People want it. It's growing.
I mean, I think the argument is that every halving takes you to another level, another layer, a new network effect, which I think is a valid and powerful argument. And I think the argument that he makes, that basically 7,000, the price of 7,000 somehow seems to have been an anchor for a considerable period of time. And yes, there was a sort of temporary deviation, but 7,000 seems to be some sort of anchor. And so he's sort of suggesting the next anchor and where it can go. And, having seen, countries descend from being parliamentary democracies into sort of totalitarian police states in the space of 7 weeks, I think it's perfectly plausible to see the price of Bitcoin go up to where he suggests.
Laurent, should we bring you in here?
Thanks, Charlie. Well, first of all, thank you for allowing me to be on this tonight. So I've just got it.
Thank you for dressing up.
Well, I've actually got my top here, so I feel actually quite the part. But one thing I want to say is it's interesting why we have to listen to a very high hedge fund person when ultimately Charlie 2 years ago invested in a crypto fund and did very well out of it. And he was probably one of the few ones in this industry to shout out in his KID documents that he had something like, what was it, Charlie? 4% of your allocation in a crypto fund? Not mentioning anything.
What are you talking about? I've been talking about Bitcoin since 2013.
I know, but you actually highlighted it 2 years ago in one of your documents.
Oh, in a regulated fund. Yeah, I did have a small allocation in a regulated fund.
And
not the fund I currently run.
Who else did
for different reasons. But can we not please talk about my regulated work on this halvening call, if you don't mind?
I don't mind, but you actually raise the fact that this guy, most of us in the street will not know who he is, right? And suddenly he comes out and say, "Hey guys, we're all going to put 2% in a regulated fund," whereas some incredible people have done this 2 years ago. That is actually in front of us. Free. There you go. Free.
3 blocks to go. We missed that.
How many sharp ratios and performance?
Someone watching this? Mark?
20 minutes. It says on your site 20 minutes, Charlie.
Yeah, I'm not looking at that. I'm talking to you lot. How am I supposed to know?
Oh, I see.
Oh, it's on the site.
There are several screens,
Oh, screens. The Mark's got all the screens.
How many screens has he got there? I count 5.
Who, Charlie?
Mark, do you mind sharing your image, please, on the main thing so people can see what we're talking about here? Because there's actually hilarious. I don't know how YouTube works, but I think that the signal has to go via Mars or something. Because there's I think I counted to 7 on the test between what we see on our screen on Zoom and what comes up on YouTube. Yeah, so. It's a bit of a delay. So whatever you do, don't look at YouTube whilst you're on the Zoom call because it will totally confuse you. It's an extraordinary delay. I think there's probably a sensor.
How many more minutes are we saying, consensus-wise here? Are we saying 28, 27, 30?
Sorry, what?
Minutes until halving?
Yes.
Probably 30.
It says here 19.
Yes,
it's looking like a 28 minutes time frame.
The thing is about the halving clocks is that about 5 years before, 3 years before, 1 year before, they're really accurate, and as you get really close, they become maximum useless.
You were streaming the Bitcoin Cash halving, weren't you, Charlie?
I mean, look how a non-event that was. I mean, let's be honest.
Yes, it was indeed. We don't want to upset our followers talking about those.
Please don't
forks.
talk about Bitcoin Cash.
Exactly. Bitcoin crash, we can call it.
Bitcoin crash.
So we've got a question from Christian Westermark. Thank you for your question, Christian.
Oh, wow, look at that.
So he says, I mean, I think we've talked a bit about it, but why buy now? I sold 75% of my Bitcoin and 50% of ETH on this news. I assume he means the news of... well, maybe, Christian, you can clarify. Is that the news of the halving, or is that Paul Tudor Jones being involved? That might help us to answer the question. But I think largely, the panelists here today have said that it's not really a question of trying to find exactly the right timing, because we are still so early, and the case for Bitcoin is more bullish now than it ever has been, and so really, whether you get in, at 6,000 or 8,000 or 4,000 is not necessarily that important of a question. It's that you are getting exposure to this asset class while we're still in this early growth stage. Would that be fair to say, Adam?
Well, I mean, the reasons to buy Bitcoin is that the whole world is going to hell. Banks are insolvent. Central bankers are printing money like there's no tomorrow. The governments are proving to be totally arbitrary in relation to property, freedom of movement, freedom of expression. So many states are becoming totalitarian police states. And in such states, there's no rule of law. So no one will defend private property or your assets. So you want to have an asset that has maximum portability and maximum trust, which you control directly and is not in the control of any intermediary. So I think there are many very, very strong reasons to buy Bitcoin, and the last 7 weeks have provided a host of even stronger reasons.
Okay, so I mean, we've heard Venezuela, we've seen Iran, sanctions wise. So sorry, let's frame it a bit more. So hyperinflation in Venezuela, sanctions from the US in Iran, Argentina, inflationary. There are three of the kind of main cases I've seen. North Korea also sanctions. But what do we think is next? So we've got Charlie to talk about the macro as well. I mean, which sort of groups of countries are we going to see adopting this? I mean, Lebanon seems to have picking up volume. Hong Kong seem to be picking up volume. Maybe we can sort of run through a regional sort of overview of how we think Bitcoin will be sort of more needed than in those countries than others. Charlie, have you got a thought on that?
Yeah, I was actually doing sort of other things like WhatsApp, Twitter, and so on. But you mentioned Venezuela. Venezuela is, an interesting case study, and the most important thing about that is it's really sad, because probably a lovely people have got a raw deal on the back of a bad system. And that's not fair. And I suppose in situations like that, Bitcoin can help. I'm not suggesting that nice Bitcoin holders are going to send Bitcoins to everyone in Venezuela, because that's not going to happen. But at least it's a system that does, at the very least, keep an eye on these governments. And if people embrace these sorts of
benefits the people in need,
like gold, well, if more people had risk-off assets like Bitcoin, gold, and so on, which are system-proof to some degree, depending how you hold them and so on, then that actually holds government to account. Adam, this really is your turf, isn't it?
What, hyperinflation or Venezuela?
No, just governments and Bitcoins and gold bars and Renoirs.
I mean, I just think that this is a time when we see the collapse effectively of the existing system, and in that situation a parallel system will arise that does not depend on any of these corrupt intermediary organizations, governments, banks, etc. So I think it will be tremendously useful for the world to have a parallel financial system that works, as opposed to one that is basically in a state of collapse and is being kept out of collapse by basically holding the system in a deep freeze. And to some extent, the lockdown is effectively placing the system in a deep freeze. It's trying to prevent change. And to some extent, the people who support the lockdown don't want the change that is occurring, because they want to protect their privileged position in many ways. So by basically freezing everything in place and saying, stop, we want to get off, they are preventing the change that that is going to occur. But when that change does occur, when maybe we're released from lockdown, I think we will see dramatic changes in terms of the financial system, particularly, which has been the driver of the entire disaster. And Bitcoin is at the center of that new parallel financial system.
Is it though? I mean, come on, let's be honest. Is it really? You know,
Bitcoin is at the center of crypto. Yes, it is. I think, Laurent. Yes, it is.
No, Adam, I really cannot believe that we are at this stage yet. Because if you go in the streets and you speak to people about how much Bitcoin do they own, the majority will tell you they own nothing. They don't even know how to get in. I mean, I speak with friends and trying to, just induce them into try and understand what this is all about. Even opening a wallet is far too much.
I've lost at least 5 Bitcoins in gifts to people like 5-6 years ago. At least 5.
Right.
5 quid here, 10 quid there. Yeah, when the price was 200 or something. And it was like, oh, come on, get interested. I should have given them 1 pence. Yeah. Instead, I sort of gave 5 quid. There's no need to do that because you could have got people interested in 1 pence for 5 quid, 10 quid. There was a babysitter I had in 2015, and I said, "Do you want Bitcoin?" She was really smart. She's really smart. She's going to be the next prime minister. Hello, Paul. We'll come to you shortly. And she's 18 now. Got a scholarship to everything. But I managed to pay her babysitting fee in Bitcoin in 2015 on her request because she was a neighbour and stuff. And then a couple of years later, she couldn't believe the fact that she had all this money, and she sold it. So there are some good stories out there of good Bitcoin experience.
There will always be good stories, but the majority of people do not know what to do with Bitcoin, and that's the bottom line. Until you can actually use it for some realistic transaction, whether it's Starbucks or other coffee places.
Oh, come on. This isn't 2013 when so coffee shop went up. The price of Bitcoin went up because some coffee shop took
Okay, I've got a thought on this. I'd like to say hello to Mr. Paul Gordon, founder of CoinScrum and all-round Bitcoin OG legend. Thanks for joining us, Paul.
Evening all. Where's our blocks? We need blocks. They're going slowly. We're going to be up till 1 a.m. at this rate.
The blocks
need my beauty sleep.
The blocks are on YouTube. Don't look at YouTube because it's about 6 seconds behind us, if not 8, because it will confuse the hell out of you. But they're there. They're on the screen.
We're still on 25 minutes.
Yeah, there's 31,000 people watching right now. Oh, sorry, that's 31 people.
Yeah, so this is a little informal chin wag. So Paul, you probably caught that conversation. The kind of topic is, was Bitcoin being used? How can it be used more broadly? And I think maybe Jack Taller and the sort of Lightning based payment app that he's building. Have you seen that project?
I haven't seen the project myself.
You mean Jack Taller?
I think it's Jack Taller.
Oh.
I don't remember exactly the name of the project right now. I'd have to come back to it. But it was allowing people to send and receive fiat, but over the Lightning Network.
Right.
So
yeah,
essentially, you're benefiting from that, microtransaction affordability, whilst also having the convenience of being in fiat, which the average user really needs to be in order to use Bitcoin.
Yeah, and that was a use case which people attempted very early on. Like Bitwala, the idea that you could use the network and kind of extrapolate the network as its kind of transfer qualities from the actual underlying asset. And you had people that were saying, well, we can do that with Bitcoin, and we'll have an exchange over here in Kenya, and we'll have an exchange in London, and we'll have these kind of these corridors where these funds can move around. We've got this nice efficient network. I mean, so the idea of using Lightning on that actually kind of represents an improvement. The problem back then were twofold. There was the problem that the notion that was bandied around that Bitcoin's virtually free in terms of fees to do all of this, and it can outcompete your kind of big money transfer businesses, Western Union and the like, was slightly untrue. And the two problems were, you had, if you wanted to wait for confirmations on the Bitcoin network, if you were waiting for half an hour for, say, 3 transactions, you then had some exchange rate risk in that time. And with something as volatile as Bitcoin, that wasn't, that was a bit of a risk that was generally being carried by the companies that were operating these. So you got half an hour, 30 minutes of exchange rate risk of someone giving you Bitcoins at one end and then sending them another end and then exchanging them. So maybe something like Lightning as a solution kind of resolves that problem. Quite often, though, with these types of corridors, it generally tends to be one way. That if you have expats sending money, it's typically, if a transfer from the UK via Western Union to Kenya is typically quite slow and very expensive. The money tends to go one way, and then it becomes very difficult to manage that treasury and that process because all the money's going in one direction. So whether Lightning can solve that, I'm not sure Lightning will resolve that. It will kind of resolve the speed and the kind of underlying, market volatility risk issue. But I'm not sure, at this stage, until you get lots of two-way flow in every direction, to solve that problem. Is my thoughts on that.
Yeah.
And the Lightning network is still, I think it's a fantastic, idea and experiment, but it is still, we have to remember, it's still very experimental at this stage. So in terms of the question that I came in on, is it ready for the mass adoption? I wouldn't, I'd be very wary about, pitching Lightning as a solution for mass adoption
keep
right now.
Keep your grandma away from Lightning. That's the message.
Well, it's fascinating. I think it's a great design, and very interested to see where it goes.
But, I think that Bitcoin sits at the top of this ecosystem of crypto. Yeah, and crypto does loads of interesting things, and there are tons of examples, and perhaps people can talk about any example they like. But in the same way, the dollar's the chief fiat currency and gold's the chief commodity, Bitcoin's the chief of crypto, and that's it. Does it need to be money? Do you need to buy coffee with it? I don't think that really matters. I think provided it's a reliable liquid asset, then that's its future, that's its role. Discuss. Adam, I can see you're sort of twitching. Let's put that to you.
I think it's much more than that, and will prove to be much more than that. For now, that is, I think, quite a good thing to be, and quite a necessary thing to be in a world that is running out of safe havens, running out of digital stores of value. With most large stores of value and almost all institutional funds and pensions basically in assets that are worthless unless they're supported by an endless tide of sort of printing and jawboning. So you want something that effectively stands on its merits, and I think Bitcoin is what you say it is now, but can be at the center of a new system in the future. And we have only just begun to explore the possibilities it has in terms of being, the center, the reserve asset of a new system. In terms of Bitcoin being used for payments, there is a company called Paxful, which I think is very interesting because it uses Bitcoin and many other things as train tracks for moving money around, for making payments in many different countries, in many different methods. And it shows the sort of multi-dimensional nature of money, where gift cards are money and phone points are money, and the way in which all these things can be knitted together. That, I think, is something that crypto has shown us toward, and that I mean, that's something worth looking at in terms of payment and transfer and paying for things and connecting all the systems together.
Paul?
I was going to say, my long-term view has always been that this will be a long-term kind of journey for, if we're talking about something as fundamental as a kind of global form of money. Now, whether we kind of talk about a currency aspect or kind of a replacement for a form of globally accepted hard money, to replace gold, all forms of money have had a certain shelf life over time, and they've served a purpose, usually within certain geographical boundaries, and those boundaries have often become their limitations. I mean, gold, it took millennia really for it to become globally adopted and accepted. If you were a Spanish conquistador landing in areas of Central America a few hundred years ago, the value that those conquistadors had for gold versus what the locals had for gold was very different. And it was only really that as trade routes broadened and gold was eventually over many years accepted as the global kind of independent ledger, stateless ledger, which anyone could have recognized and accept. But it took a long time and money evolved. And I just think we're at the very early stages of the same thing. Gold stopped working many years ago because of those international trade routes and the ability to settle with it over broad distances, safely and securely, and in a small amount of time. Now, Bitcoin off the shelf was way better. It's much more portable. It can be delivered anywhere in the world. It's much more divisible than gold. So, coinage had limitations in terms of how divisible it was. But is that 2 blocks? We've got 2 blocks coming.
2 blocks. 2 blocks.
2 blocks. That's good. Thank you. We can interrupt for that. So look, Bitcoin has these qualities of money. It just doesn't have all of them. And gold never had them on day one. The first human that was walking along a riverbed and found a shiny nugget of gold and was the first human to lay eyes on it. Gold wasn't then a global currency. It was just a weird shiny metal that looked different from some other metals. So I just think it will evolve over time. And the most important things in terms of that recognition is for people to more broadly accept it and trust it. And that trust takes time to build. So I think we're just on the first part of that journey. Yeah,
one of the things about gold that's interesting in that regard is that, we've only had decent communications for a century and a bit. And before that, when you had no communications, something that was identical in 2 countries or across an ocean or whatever was really important. And then, one of the reasons why people got bored of gold, I suppose, with modern communications when they came through, apart from the Volcker moment and the tightening of money in the early 80s and so on, but you also had this sort of boom in communications. And for a brief while, history will look back and say, there's a sort of 4-decade period, possibly 5 if we're lucky, Adam, where the fiat system worked beautifully well, and communication was at the heart of that. But you could also say that, but because of that, some of the central bankers have said, they sort of got too big for their boots, and they've sort of abused the system somewhat. And so you've got these alternative assets that have become important again, because, for example, gold fell in the 80s and the 90s. For many, many reasons, and we know the macro reasons, but maybe communication was something. I'm trying to bring a tech angle in here. Maybe the fact that we had such good communications in the 80s and 90s was one of the reasons why we felt it was a barbarous relic. But here we come back in the 21st century, and maybe Bitcoin solves that problem, but also we like the backstop of gold too.
Well, I won't hog because I'll let other people in, but just quickly on that point is, if you think of money as a form of information anyway, and we have kind of our knowledge information, which has kind of moved along one form of network over time, and most recently with the growth of the internet has enabled this like ubiquitous and instant kind of dissemination of knowledge and information. Now, the form of information that money represents, which is some kind of history of maybe people's, expended energy, if for people that buy into that idea, it's just we've not had that digital representation of it. So it's actually naturally been moving slower than other forms of information, and probably rightly so, because it kind of has different qualities. So the idea that you can have these 2 channels of information that actually can coexist on the internet, I think is like the most interesting and powerful thing. But it took 40 years for people to realize. Think of the guys in the early 70s that were working on the internet and were probably banging on about it to all their family, and everyone was like, bore off, you're boring me, much like everyone in the early days going on about Bitcoin. And eventually, the user experience was improved, and other kind of protocols came along to make the experience more efficient and usable. And eventually it just became naturally embedded in our lives. And I think we're just on that same path. We're just 30 years behind.
Well, I think it's been a really interesting discussion about a lot of the history of money and so on. But I think there's something more pressing. Is there an elephant in the room? Is there a halving event coming very, very soon? So should we get the conversation back to that? There are 2 blocks to go. And can we ask Mark to make damn sure that we get the first knowledge of one block to go, and all those sort of things. So we really are on this, and we can celebrate. What's going to happen, Laurent? What's going to happen as we go to one block to go and then on the block?
I'd love to have that crystal ball for you.
What's going to happen to kangaroos in Australia?
But I think we've got to be naive to believe that whatever happened the last two halving is going to be similar to this one. People are a lot more alert. There's a lot more people involved in blockchain these days. We have institutional grade investments in all parts of the blockchain ecosystem. People understand this environment a lot more, and it's certainly not going to have a similar effect to the trend that we saw in the last two events. And let's be honest, how many people actually witnessed the first event? That was 8 years ago. So if you and I, Charlie, we probably saw this 4 years ago. In fact, you wrote an excellent article back 4 years ago on it. I helped you writing that article as well. And, it went down. So my belief is that we're going to probably see a very volatile phase, which is actually already happening. We've seen a trough there about 8,200. It's gone back at 8,700 in a matter of 30 minutes. So we're definitely in a volatile period, and that volatile period will not end after the halving. I certainly believe that you're going to see some downward pressures, but long term, Bitcoin is definitely on the up. And there are, from all of the arguments that you've portrayed today, there are a lot of reason why Bitcoin is on the up. There's going to be scarcity, and a lot more people will want to be involved in this. So long term, yes, going up. Short term, probably not.
We love the optimism. I think I've got to say this is a key moment. Looking at the chart, you mentioned that there's some volatility today and yesterday. Volatility's picked up, but we are actually battling now with an uptrend that was started on the 12th of March, after that big sort of liquidity crunch sell-off that we had, and so we're on that trend line. And the second is the 200-day moving average, which we broke free from. We got that the 200-day moving average is at about $8,000, and we got up to 10. So we were a good 25% clear of that, and we've now come back to revisit it. So we're sitting on two supports, right? So if you're into technical analysis, I dabble. I wouldn't say I'm a massive fan, but I dabble. This is a clear decision point. If halving, if the stock to flow model really is an event, then we would expect to see price reject this 200-day moving average and move on upwards. Now, with that said, looking at the 2012 and 2016 halvings, volatility dropped significantly after the event. So all these people searching on Google, what is the Bitcoin halving? How do I buy Bitcoin? We've seen it's higher than it's ever been, which is great. New entrants, new enthusiasm. People are ready to get involved in Bitcoin again. But after the halving happens, if they've not made their quick buck, then I expect they'll just sit on their money and wait for a while, and volatility is going to drop back down.
Now, James, are we allowed to look at those couple of last halving events on a PowerPoint, or is that not a good time? And the other thing that's been highlighted to me from Control is there are some interesting things in the comments that we ought to refer to. And but we have got 2 blocks to go, so I'm thinking maybe we've got time for a couple of charts. Do you have a vote?
Charts. I love charts.
We love charts, and they're not ready, so thanks for offering, Charlie.
Yes. Well,
Charlie chart.
Charlie can riff while you get them out.
Yeah, but I don't know how so maybe someone can tell me how you launch a
ready.
PowerPoint without having to go through this whole procedure. And if you have it pre-launched, then you can't do what you want to do. And then you've got to flick because you've got the wrong chart on your live, which is terrible.
I think it's Command L or something. I think it's Command L or something. But anyway, you got there.
There's the
That was
first
very elegant.
back in 29th of November. Can someone keep an eye? Oh, last block. We better get on with last block, gentlemen. Whoa. so got to get on with this. Right, so that's 2012, and that vertical line is where the halving took place. And there's two charts here. One's the Bitcoin price in black. The other's the premium to fair value. ByteTree is a big thing. And, Bitcoin was undervalued at the time of the first halving. Okay. And so it didn't really matter what happened. It was going up. So stock to flow stuff would be, you need to be adjusted for that. But halving just happened.
We got another block straight away.
Straight away. That's it. That's it.
That's two quick blocks.
To the moon! Hey!
What was that? A 1 minute block?
That just happened to the moon. That is incredible. It just happened.
20 second block.
Right.
Incredible.
We'll stop sharing this screen because who cares?
Yeah, phenomenal. Let's.
Who'd have thought? Typical.
Yeah.
Just when you need the blockchain to give you a bit of time, what does it do? It comes and kicks you in the mouth.
What's the price tag? What's the price reaction? Larry, come on, you're the market maker. What's the price of Bitcoin doing?
29, it's going up.
Come on, tell me, come on, more.
85.37, it's going
More.
up.
Come on.
To the moon.
You know,
You're fine.
you know that the reward doesn't halve for 100 blocks.
Oh, Paul, you killed it for us.
Well, it halves, doesn't it? But it can't be technically moved.
Oh.
for 100 blocks.
Yeah, but so the miners aren't getting the miners from 100 blocks ago are still getting their 12.5 bitcoins. But it's a technicality. They won't hit the market for 100 blocks anyway, or the reduction won't hit the block.
We've had you on for the last 5 blocks. So you can tell us that.
I don't want to be a party pooper. I'm not waiting 100 blocks. Jesus. Actually, that'd be about tomorrow night when we've got the 5 o'clock. We'll probably be spot on for when the first actual.
I think you're right.
So we could actually be the only gathering which is spot on when the first actual halving or halved block will be released to the miners. It'll be spendable.
Good point. So,
As if we planned it.
We've got 38,000 viewers. Sorry, that's 38 viewers.
38.
And we've got a lot more tomorrow night because we did no promotion for this whatsoever. Just a couple of tweets. And thank you everyone for joining us. It's I think you just feel it's like another century, isn't it?
It is indeed.
That's incredible.
Shall we have a quick look at?
I don't remember in 2012 there being any sort of excitement. I think there was a few posts on Reddit going, "Oh, it's halving."
Yeah, but Mark,
Quarantine is
when you traded
driven us all
Bitcoin
mad.
in 2012, you could point at the transaction and say that was my one.
Yeah, that's true. There was one in that block.
We could have a quick look at the network and see how it's responding live.
Yeah, let's do that.
Okay, I'm gonna drive.
I think the point is the point is tomorrow's our big show, and that's where we've got a huge lineup of guests. The reason we've done it the night after is because that's when there's a lot to talk about. There's really nothing to talk about tonight, as you've probably figured out by listening to us.
Will we be able to find someone that had their transaction included in the first halved block? Should get them on to interview them. What does it feel like?
We should indeed.
Or speak to the first miner that had their revenue cut in half.
Do you think that a Bitcoin that's been confirmed in blocks 630,000 is more valuable than a Bitcoin that wasn't confirmed in that block? Do you see it at Christie's or Sotheby's?
It possibly has. It has some collectible value, I guess.
Okay, so just a quick look at what's going on chain. So in the run up to the halving, so this is the halving on the right side, over the last week, we've seen the number of transactions, the total value of transactions increasing significantly, and the average value of those transactions has also been going up. So basically more high value transactions on the network in the run up to the halving. So we could say that's more participation from sort of private investors, less retail, perhaps. As we move down, we see the fees on the network. So, as we have more transactions taking place, the fees go up. There's more competition for block space, and we can see that here over the last week. And what's really interesting is now what we'd expect to see is generation will drop because miners will reduce their hash power because it's unprofitable or less profitable for a lot of them to mine. And fees will continue to rise, is what we expect to see.
James,
so,
is there something wrong with your price there?
Well, so this is the ByteTree index. So we take 5 of the most liquid exchanges and we volume weight average the price on the exchange. So the more different...
85, not 86. That's what I'm trying to say, which 8,500.
Yes, exactly. So, I mean, it depends which price you're looking at. So we take an index of... We've built an index off of 5 different exchanges.
It's $100 adrift of the index that everywhere else. That's what he's saying. Is that because of the exchanges?
Yeah, because of the 5 exchanges that we use. So we take in Binance, ByteTree, Coinbase, and a couple of others.
Right, but they're all at 85. That's what I don't understand.
Thanks, Laurent. So we're going to add in some more exchanges. I think OKX is the big one for Bitcoin volume that we don't have.
The point about ByteTree is about blockchain data, and if you notice, we haven't pushed the price up in any way. There's no technical analysis. There's none of that.
Exactly.
There's no bid offer. There's none of that. It's all about the fundamental medium to long term story of Bitcoin. And
we're just trolling you, mate.
I know.
So what I wanted to point out is that here, this is an interesting one to watch, is the baseline generation. So this is the rate that new coins are spat out by miners and entered into circulation, and this is going to drop off significantly over the coming week. And I think within a couple of hours, we'll see it really start to fall. And it's all very exciting, really, to keep track of. Laurent is even giving us a clap there. That's fantastic.
Have a question.
Look at the question. On the questions, we got Christian Westermark. Back in 2012, I was tipping BTC left and right. Could have gone up, not left and right. Christian, that was a joke. Christian, don't take it seriously. Don't kill me. I'm now BTC greedy. Scarcity must influence the price to some degree. Well, of course it does. It stops it going down. But my view is that scarcity stops it going down, doesn't make it go up. Network makes it go up. But we did that when we had, 23,000 viewers about an hour ago. So are we happy with the Bitcoin price reaction? What's happened? It's done not much.
It just dropped quite significantly, 84.60. There's been a big dump there, and it's carrying on.
Larry, I think in the context of what's happened in the last few years, it's a blip, and I think in the context of what's happened in the last few days, it's negligible. Well, I recall the recent price move over the course of the 630,000th block, precisely nada.
But here's a question for you, ByteTree guys, then.
Yeah.
I mean, we've got 2 markets here. We've got a hodlers market, people that aren't going to sell whatever happens. And during the March meltdown, when everything was melting down, it was quite clear. And even the move up last year, when we were languishing on the lows of around similar lows of 4,000-ish, it's probably quite clear that a lot of that rally up, which it's always funny that everyone panics and questions why we're selling off, but seems to question less why we're going up. But we moved up to 14,000 last summer, and this is big difference from maybe prior to the first and even the second halving was the emergence of all these derivatives exchanges and products, and even CME now. And so we seem to have this band of, say, the data during the recent sell-off kind of indicated that very few hodlers were selling. There was very few Bitcoin days destroyed in comparison, and so everything really between 4,000 and 14,000, and maybe again back up to 10,000 now, is kind of your speculative pricing. Much of which is driven by derivatives, which are leveraged, so you have a waterfall effect when stocks go off. Is that something, more broadly, we should only be concerned about, like the hodl price versus the speculative price? What's your thoughts on that, Charlie?
Why me? Why me?
I don't know.
I'm here for the long term.
James, then. Adam, Laurent.
No, I think it's super interesting. It's a really great question.
It is a good question. It's a hard question. That's why I'm trying to give it to someone else.
So we've actually got Torbjorn from Arcane Crypto has just joined us.
Hi.
Hi there. Welcome.
Thank you. Happy Halving. I just thought
Happy
I'd
halving.
test out my Zoom on my computer, because actually I haven't used it on my computer before, so I figured it made more sense to do it tonight than tomorrow when it's actually the big event.
It is. This is the practice. This is a rehearsal. Torbjorn, welcome. Thank you for coming. Have you got wet feet?
Sorry?
Have you got wet feet? Your picture
feet?
like you're standing in the sea.
Why would I have wet feet?
Sorry, it was the picture we saw was you standing in the sea with your.
Oh yeah, my profile picture. Let me see what picture I have here. Oh yeah, it's close to the sea, but not in the sea. But yeah. So how are you? Nice to finally meet you. Actually, I don't think I've spoken to any of you actually, other than on email. But,
No, we haven't. So do you know? Have you met everyone here? Sorry, do you know people here? We've got Paul, Gordon, CoinScrum in the middle, although your grid may look differently to
do I get the full grid here? There. There's a lot more people. Only saw you, James, and Charlie.
So can I just interject and say, Torb, it's really lovely to have you here. What we've learned in our rehearsals recently, learning about this Zoom, the whole world's caught up with this stuff in the last two months. Most of us didn't know what Zoom was, and all these sort of we've all massively increased our knowledge of the internet, which is very positive for Bitcoin, by the way. But we've learned that those sort of fake backgrounds that you've got on right now kill your sound quality.
It does. Well, I can turn it off. It's just that. My real background.
I cleaned the bedroom today.
If you don't believe me, we'll do a sound test on James right now. And James, what you're going to do is put a background on and then count or something, and then take it off.
So here's my background. I've just arrived in my loft apartment. I'm going to stoke the fire over there. Where is it? There it is. Just sort of just stoke the fire. Okay, how was that?
I don't know what you're doing, but
I'm not sure. Nothing happened here. But yeah, where do I
take the background off and do a talk?
And we're back in the apartment.
I mean, did anyone notice the sound quality difference there?
Yeah.
Is it better now?
Massively better.
Wow.
Massively.
That looks like natural light that you've got there. Is it still?
It's still natural light. Yeah.
Very good.
Sitting, it's squeezed on a tiny little desk right next to my bed, but in front of the window. Home office.
Brilliant. So yes, we've got Paul Gordon, CoinScrum, Adam Cleary. Adam, I don't know exactly what you do now.
Neither do I.
Okay. Good.
Life in the time of coronavirus. What is any of us doing? We're not. I don't think any of us are sure, really.
Adam should be in Parliament right now.
Yeah, right.
Okay, very good. And then we have Mr. Lauren Cassis, 21 shares, MD. Very exciting.
Yeah,
so it happened.
I can see that the Bitcoin price is not collapsing, but what I can see is our viewers are collapsing. So I think it's time to say thank you for them for listening, and perhaps to wrap it up, unless anyone's got a final snappy point they'd like to make. But we are going to be back with a fun pack show, fabulous guests. This is very much a rehearsal. Thank you for coming. Anyone got a last point? Raise your hand if so. It better be interesting, or I'll personally kill you when the lockdown ends.
Save it for tomorrow.
Leave it for tomorrow. Thank you, ladies and
Hi,
gentlemen.
everyone. Great having you. We saw the halving happen. Thank you.
Yes, you've spoken. Thank you.
Brilliant.
Halving.
Thanks for joining us.
Happy halving.
Happy halving. Happy halving.
4 years. Yay.
All right. Good night, everyone.
Good night.
Right.